Welcome back. So now what we're going to look at is the very unusual structure of a venture capital and private equity fund, and they're quite similar. This is the most common structure, called the general partner limited partner structure. And remember, we talked about the means of the firm. Structure is one of the fundamental means of the firm. Let's see, let me start over here. So the first thing you want to look at is you get the individual fund managers. These are the entrepreneurs. These are the people actually behind raising all the money and everything. Okay? Now what they do is they start a management company. So the fund managers work at the management company. And the management company is kind of the thing that you as an investor will know about. That's the company with the headquarters and the beautiful downtown area and the fancy offices. And that's basically where most of the people work. Okay, the actual management company. That's the face of either the venture capital or PE fund, right? So if you think of like 3G Capital, that's the management company. Okay, now, you take the management company and what do? They set up a general partner, and what happens to the general partner, it's kind of like a subsidiary company of the management company, and what this group does is they make the investment decisions. This is, they decide where does the actual money go, okay? Now the general partner LLC sets up a fund limited partnership. And the fund limited partnership is that's actually the legal organization or the legal entity that actually puts the money into portfolio companies. When the limited partners, that's the investor in the VC or private equity fund, when they invest, it goes straight into the fund limited partnership. Okay? So a limited partner, contrary to what you might think, does not invest in an actual management company. They inject it straight into here. And then it goes into the portfolio companies, aka the individual entrepreneurs. It's a little weird. There are not too many structures I can think of similar to this, but basically what it is, it's a way to keep bankruptcy and lawsuits off these individual fund managers in the management company. Because you have to remember, the management company itself may be managing multiple general partnerships, making multiple different kinds of investment decisions, and each one of these may have a few different individual funds making the decisions into dozens and dozens and dozens of portfolio companies that are financed by many, many limited partners. So it's just one, by kind of hiding the chains of command, it can kind of provide a degree of protection. That's why it looks like this. It's a weird structure. I got it. If you have any questions, put them in the comments. If you found this useful though, give me a thumbs up and make sure you hit that subscribe button. I'll see you in the next video. We're going to talk about how these people actually make their money. I'll see you then.